What's up, traders? Welcome to another session. Right now, we're going to have Powell come in and talk about the press conference. We had the rate come at 2 o'clock.
Good afternoon and welcome.
And here's Powell.
We decided today to lower the target for the federal funds rate by 1/4 percentage point to a range of 2% to 2.25%. The outlook for the U.S. economy remains favorable, and this action is designed to support that outlook. It is intended to ensure against downside risks from weak global growth and trade policy uncertainty, to help offset the effects these factors are currently having on the economy, and to promote a faster return of inflation to our symmetric 2% objective. All of these objectives will support achievement of our overarching goal to sustain the expansion with a strong job market and inflation close to our objective for the benefit of the American people. We also decided to conclude the runoff of our securities portfolio in August rather than in September as previously planned. And I'll discuss the thinking behind today's interest rate reduction and then turn to the path forward. As the year began, both the economy and monetary policy were in a good place. The unemployment rate was below 4%, and inflation had been running near our 2% objective for 9 months. Our interest rate target was at the low end of estimates of neutral. Over the first half of the year, the economy grew at a healthy pace, and job gains pushed unemployment to near a half-century low. Wages have been rising, particularly for lower-paying jobs. People who live and work in low and middle income communities tell us that many who have struggled to find work are now getting opportunities to add new and better chapters to their lives. This underscores for us the importance of sustaining the expansion so that the strong job market reaches more of those left behind. Through the course of the year, weak global growth, trade policy uncertainty, and muted inflation have prompted the Fomc to adjust its assessment of the appropriate path of interest rates. The committee moved from expecting rate increases this year to a patient stance about any changes, and then to today's action. The median committee participants' assessments of the neutral rate of interest and the longer-run normal rate of unemployment have also declined this year, reinforcing the case for a somewhat lower path for our policy rate. These changes in the anticipated path of interest rates have eased financial conditions and have supported the economy. At our June meeting, many committee participants saw that the case for lowering the federal funds rate had strengthened, but the committee wanted to get a better sense of the overall direction of events.
Hold on, guys. I'm just going to refresh it. I believe the stream has paused. After he's done talking, the speech is usually 5 to 10 minutes, not much longer. And it's actually usually more important than the decision itself, because the decision is usually priced in. And once it's been announced, the Powell usually comes on and tells about the long-term and short-term outlook for the U.S. economy. So we've heard a bit about what he spoke right there. And obviously much of this is due to the global trade tensions.
Prices, and is a better gauge of future developments than is total inflation, has run at 1.6% over the past.
Apologize for this. While that plays in the background, I'll just let his voice come in the background. We'll just look at some pairs and how they're reacting. So gold has actually tapped to this level 14.16, nice resistance level, and it is looking like it'll do a wick fill down. The dollar is showing strength, and it's kind of odd. Usually when a country cuts interest rates, it's actually weaker for the currency. It's just like any bank account. When you have two options between 1 and 5%, you usually go with the account with 5%. So that's the same thing here. Overall, the labor market is thriving, the job market is thriving. Inflation's at 1.6% instead of 2%. So there are indicators suggesting that the economy is thriving. But I believe Powell did this in terms of making it a maintenance cut and almost of a over insurance policy, I guess, because of the trade war. Negotiations in Shanghai this Tuesday were pretty much where they left off in terms of coming to a deal. And so I think he thought this was the best because not many countries and nations in the world can cut their rates like the U.S. can. And since the U.S. is one of the biggest trade partners, in order to cater to their other importers and exporters, it's better on their hand to cut the rate, reduce interest, so businesses can take loans and actually trade in the global markets because things are looking very dry. Taiwan is struggling. China is struggling. Majority of Australia is struggling. So Australia just cut their rates. European Union is looking to cut their rates. We all know Japan has a negative interest rate. That's why they're safe haven. So I believe in the long term they do think this is a nice approach. So over the short while, and here we go, we see USD just taking over. I believe Powell just talked about the thriving economy. See if we can get this stream running again. Once the speech is done, we can go on the charts. Until then, it's just going to be a lot of fake outs and volatility. So let's see if the speech is done. You think the government would have better service than this? But let's take a look at Euro while we wait.
Michael McKee.
Okay, so I believe he's answering questions right now. And here Euro is looking like it's gonna go make new time lows. Going to the weekly, we spoke about this last week that if we did get a close below 1.11 thousand, as you can see right here, close, retest, rejection below 1.11 thousand, shorts are go to 1.10 thousand. We may see that happen. It all depends on Friday because Friday we do have NFP come out and unemployment rate. So that will be also a major catalyst to whether if this move does play out. But earlier we were in longs. Euro, Spanish PMIs and CPIs came out worse than expected. So we had some weakness. We got out at negative 30 pips and loss. Well, that's better than losing this much. You just gotta know when to cut the trade. And so it is looking like we will have a nice short opportunity. One of the benefits of fundamental events is once it's done.
I think it doesn't. I think the evidence of my eyes tells me that our policy does support, it supports.
Okay, so I'm just going to mute this. We now know how the markets are reacting. I believe Powell did speak about the near-term strength and that this was just a maintenance cut, so you won't see this as the norm for the US dollar. The US dollar has backed up many currencies for decades and centuries, so it's not looking like it's going to move anytime soon. But now that the fundamentals are almost out of the way, or at least one of the major events, we can now start looking at trade setups that we can enter. So USD, Euro USD, we're gonna let the daily close before we jump into shorts, because what happens during these news events, you may have a impulsive move, and people will enter because they're thinking it's time to short. Let's go go go. But what price would actually do sometimes is retrace maybe 30 or 40 pips to the key level it broke or the fib level, and then go down, or it could just be a fake out. So patience pays. NFP week, not too many people trade, and there's good reason for it. There's a lot of just fake outs, manipulation, and decisiveness. So we'll just plot our fibs, and we can go to the daily, the 1 hourly, and see places where we can enter. Hopefully our key level of 1.11 thousand aligns with one of these fibs. And so right at the sorry for the lag. Right at the third, in between the 23 and 38.2 fib level is our 1.11 thousand sec level. So we could possibly see a retest there before going down. So if you're looking for euro shorts, have sell stops within this area, or just watch for price action, and you can have a nice setup down. But it is looking like euro is going to cut rates. USD will cut rates, but it's for the short term. It's nothing to be too exaggerated going into 2020 or 2021. So long term, we are looking for EURUSD shorts. If you guys have questions, send them through. We'll look at USD yen, which is another trade we were in. It's not good to trade the news, but if you're trading with pretty decent size stop losses, it's okay. So this is the reaction we're having right now. We're almost about to get stopped out. We did flirt with some profits earlier, and before the statement, I did ask everyone to close if they wanted to at this point at -8 pips. But we might actually get squeezed back down. Who knows? We are running into some resistance at 108.825. So since we're already this deep into the trade, you can just let it play out. Who knows? We might actually come back down, and the setup may be on the table for us. Going to gold, we covered gold, Aussie, and I've talked about Aussie fundamentally. They're looking to cut rates. Their major trade partner is China, so obviously the ongoing feud with China is not helping them at all. And we're seeing Aussie just spill. Last week we did have a nice short for Aussie, and it hit our take profit to the T at this blue horizontal line right here. And going to the daily, we can possibly look for new areas for a take profit. So we're right in the midst of our support zone, and we're coming to a weekly ascending trend line. So maybe we should, if you are short, you should probably start taking profits off the table. Nice descending trend line, and it dates back to, I apologize for the lag. I do not know why the lag is still happening. I did close the Powell stream. Going to the weekly, we drew our ascending trend line from this point back in 01, and we're going to finally touch it again about 18 years later, and our reaction at this area will be key. I do apologize for this quality. It's kind of weird. It's never usually this laggy, but hopefully you guys are kind of understanding what I'm saying based on the levels you have on your chart. So for shorts, we have about another 50-ish pips to go before we do come to some dynamic support at this trend line. So be cautious of that. If you are in shorts, you probably made another 50 pips from that Powell speech. So we have covered Euro, we covered Aussie, we covered USD Yen, Gold, and one last pair before we send this off, USD CHF. So USD CHF, zooming in, it does look like we were stopped out. We also had a nice short trade from earlier. Stop loss was around 37 pips, so it wasn't a major loss, and we just ran into some resistance right now, reacting to it pretty nicely. Just looking to the left, pretty major resistance for quarter 2 and quarter 3. We could enter again off this level. I did tell you guys that I don't normally trade NFP, just because it's never been much of my I guess trading strategy. It doesn't align with it. Usually I would want clean price action, and that's what you're not going to get during the NFP week. But if I do see some rejection off this level, we could have a nice short again. The overall basis was a short, Even if you pan out a bit, we were making an inverse head and shoulders. So this was our left shoulder, our head, and this would have been our right shoulder somewhere down here. But we didn't get to that point, obviously. So we'll see what happens. Maybe if we do come down, we could have our right shoulder printed. But that is the cover of the FOMC statement. Going to Forex Factory, we had the press conference. Later today, we're going to have some Chinese fundamentals, manufacturing PMI, which will be key for Aussie. And then looking to tomorrow, it's going to be majorly the pound. So the pound is going to have its inflation report, monetary policy, and its bank rate. So this whole week is stacked on fundamentals. If you did have a tough week, I believe we were at negative 60 or 80 pips for the week. Last week we had around a 500 pip week. So you're gonna have some weeks like this. I actually might just opt out of NFP week, and you guys could use the 7 other providers we provide. But it's fine. We'll kind of limit the trades we take this week, unless they're they're really screaming to be entered. But that's that. Before I finish this, I just want to remind everyone on the live stream about the offer and the promotion that ends today at 12 a.m. Eastern. So you probably got in the emails and the Telegram messages. We at Forex Lens, this is our website right here, forexlens.com, are running a promotion. If you become a paid Signal member before the 31st at 12 a.m. Eastern, that's today, you'll be grandfathered into the old pricing structure, and you get a free upgrade to the portal. So this is our portal right here. You'll see the live session. If I click play, you actually see the live session run right now. Sorry for that, Skylar. Hopefully you can hear me better now. But you'll see the live session play right now. It's a bit laggy, but you can see the title. You also have Bloomberg Live playing. Because the stream's lagging, I'm not going to be opening too many tabs. And then you also have charts, which you can actually open up and pop out. So we can do something like this. Have your own chart. You can make it full screen. So while I'm doing the live session, on another screen you can have your own chart and you can analyze it. So you can draw trend lines, Fibonacci's. You have the full features accessible to you. And also you have our signals. So you have Atom, you have Bravo, you have RP, Vanity, Bloom. You can just click any of these names and you can see pop off of the signals, like so. I once again, I apologize for the lag. Hopefully when the video renders you can see it in real time. But here's Atom FX signals for the day, and you can go through them. It's just another way to have everything all in one spot. So you're gonna get this on the house if you become a paid Signal member by 12 o'clock today. We will be keeping everything free, including the trading room and the free signals on Telegram, until August 16th. So make sure you take advantage of this promotion. If you want to look at our old pricing structure, I'll go ahead and show you here, and I'll give you an example. So if you scroll down, our most basic one is 75 per month for our 5 signal providers. Make it 8. You've got 8 of the best signal providers in our opinion in the game. They have at least 5+ years of trading experience, and we vetted each signal provider. Some signal providers are intraday, swing, some are scalp based, some only do fundamentally based trades. So there's a mixture, and they're all sent at different time zones. Different time zones because people live in different time zones, and so that way you don't miss out on any trades. When you wake up, you can trade based off whoever sends trades when you're awake. And going based on the grandfather offered, so after the 31st, which is today, this 75 per month will change to 97 per month for the signals and the trading room. If you only want the signals after today, the price will remain the same. But if you're looking to learn how to trade, learn to be an independent trader, and you want the daily live sessions, and you want the TradingView Pro charts, you want the news and the Bloomberg and the live chat, then you should obviously opt in for this trading room, and you should take advantage of the deal. It's going to end within 10 hours from now. We are not looking at getting anyone to forcibly enter this promotion, but if you think it's going to be useful, and we had plenty of people in the support emails think it's very useful to them, definitely take advantage of this offer. So that's today. What's up, Skylar? So Aussie USD take profit 4 has hit. Happy you caught that trade. Last week I think we exited a little premature, obviously because it was a Friday. But it's great that you guys are making pips, and I hope you guys are learning how to trade by yourself. When I'm asleep, you might see a trade setup, and you're more than welcome to enter it. But that's today's session. I will see you guys tomorrow. Tomorrow we have some major pound fundamentals, so we can talk about that. 11 a.m. Eastern. And if you haven't signed up and taken advantage of the trading room, please do. I feel like it's very useful, especially for a novice trader, to have everything all in one spot. You can use it on your PC or even your mobile or tablet device. And lastly, that promotion. You have 10 hours, 12 a.m. Eastern. Take advantage of it. Do something for your future. Invest in it. You spend $200 on a pair of shoes. Just try out the service for a month, for a nice fee of $75 per month. And if it's not for you, you can always elect to opt out. But we guarantee it, and we're confident that you enjoy the service. We take a lot of passion and pride in our work, and we definitely want you guys to get on it. So that's enough talking for today. I'll see you all tomorrow. Happy trading and be safe.